Good morning, afternoon, or evening all. Thanks for joining us today for Stable Stories. Stable Stories is a video series that explores the behind-the-scenes experiences, learnings, and insights of builders pioneering in the stablecoin industry. Today we have Ben Nadereski, co-founder and CEO of Solstice Finance. Excited about this one today. Welcome, Ben. Thanks for joining.
Thanks so much for having me, Dave.
Good. How's your day going?
It's going well over here in Lisbon, Portugal. It's surprisingly cloudy for a sunny city, but it's going well.
Every now and again, the change of weather is nice sometimes. I suffer the same problem. Nice.
Exactly.
Cool. So let's kick things off. Relatively easy. Tell us a little bit about your background in crypto and how you came to Solstice Finance.
Absolutely. So starting things off, my background comes from the physics and math world, studying in university, working in physics labs before entering Wall Street, where I was a derivatives trader. I got into the crypto industry around 2013, market making on the Bitcoin side before moving into a string of different institutional crypto applications, which includes R3, expanding their Asia effort out in R3 with the institutional and enterprise level blockchain integration to corporates, as well as consensus ecosystem, building OTC valuations, metrics on chain using Quorum private instance of Ethereum at the time to optimize the OTC data flows, moving over to Six Digital Exchange, where I led the M&A division, looking at new investments companies in the crypto and DeFi ecosystems, to Switzerland's stock exchange digital asset play. And then finally with Galaxy Digital, where I was leading a lot of the institutional crypto adoption and integrations, which included things like the first crypto trade with a bank in history that was settled in crypto. That was the non-deliverable option trade with Goldman that we settled in Bitcoin, which was great. But a lot of that institutional crypto narrative has always been preceded by my deep love for the DeFi and DeGen industry. And that's where I've been, deeply involved since 2013. And that is where the nexus of all of these, my background comes into play. After joining Deus Ex Capital about a year and a half ago, who's the asset manager based out of London, we founded Solstice Labs out of Deus Ex Group to focus on this, what we call truly an institutional DeFi play. It's a DeFi protocol, public permission with hooks into the CeFi play. So it combines a lot of the experiences that I've had in the past to offer an institutional grade offering into the DeFi industry.
Amazing. You sound like the epitome, a walking DeFi mullet.
It's funny because I always joke my outfits in my closet are black t-shirts or white dress shirts, and there's nothing in between. And that's always
keeps it simple.
Yeah, exactly. A lot of context switching, but
yeah, nice. So like sort of on that note, we ask all of our guests standard question at the kickoff. First time using a stablecoin, what was it? How was the experience?
USDC on Ethereum. And at first, to be honest, I was almost like, why would I even go ahead with this and trust a third party to manage fiat? If I have to manage fiat in any regard, then I'm just going to use it by myself. And there weren't a lot of widespread applications for USDC at the time. And I got into the stablecoin game itself late, even though I've been in crypto for a while, because honestly, I didn't quite see, or the application usage wasn't developed enough. And now we're at a point where everyone calls it the killer app, and this tipping point of adoption. But effectively what it is, it's the gateway drug into everything crypto. It's because immediately you understand the core value proposition of a token. You understand what it means to have value in a tokenized format in a smart contract. That whole narrative of education phase of getting people up to speed on blockchain and proof of reserve, proof of history, proof of authority, all these different consensus mechanisms, the whole education thing that we had to go through as an industry simplifies by just saying it's a store of value on chain, and it's backed by now lots of large numbers with safe custody assets with backings. So that trust factor and the education phase just immediately skyrocketed. And that's why we're starting to see a lot more, not only institutional, but retail participation in the DeFi industry.
It really is a bridge between the two worlds, which has seemed very fragmented until very recently, which is really exciting. Great. Tell me a little bit more about Solstice and what you guys are building there. Give me a 30,000-foot view.
Absolutely. Solstice Finance, we're really looking at a high level. It's institutional DeFi. And what that means is it's institutional grade, permissionless DeFi. And so that's for both an institutional target market as well as the retail target market. So what do we offer? We offer a core stablecoin on Solana called USX. fully backed 100% collateralization ratios, pegged 1-to-1 with the US dollar, and backed by USDC and USDT as a synthetic stablecoin by technical definition. We also have a yield product, which is called Yield Vault, which is effectively any user of the stablecoin now has access to one-click yields. And so that's important because so many of these stablecoin models that have been developed are effectively value extracting across the ecosystem by saying, come use our stablecoin, we're going to generate yields on the back end, and we're going to keep that yield as an organization. Now, in the spirit of DeFi, the spirit of permissionless access, and the spirit of ease of money flow, you have to have that participation in that yield share in order to have long-term longevity across DeFi applications. And so that's what we're starting to see in a lot of these trends of this, democratized access to that core yield function. So what we do is any USX holder has one-click access to our yield vault. And in that yield vault, you simply lock your USX up for a minimum of 7 days. And on the back end, we generate yields using a delta neutral trading strategy, taking no market directional risk. And we generate yields that have been 16% over the last 12 months rolling and 21% in 2024. Now, a lot of those yields on the yield vault side, a lot of people immediately, especially friends and investors on TradFi, question those returns right off the bat. So addressing it right front and center, you have to understand markets and crypto are much less efficient than on the TradFi side. And with them being much less efficient and much less or much more volatile, I'll say, you have things that exist like persistent arbitrage in the funding rate between the spot and perpetual futures rate that you can constantly arbitrage out and maintain market efficiency, get that value, and pass that back to investors. And that market rate on the market arbitrage or the funding arbitrage side has been persistent for years. There's always speculation of when this is going to collapse and compress. And it's been told for the last 4 years, funding is going to come down in 6 months. Is the narrative I've heard for quite a long time. In the current stages, this very month, for example, we are down, down to lower levels, closer to treasuries on the yield side. But we are not down as far as a year running basis goes. And this is something that we expect to fluctuate with a transitioning market. So addressing that yield component, it's a very attractive yield at a low risk profile that we're unable to allow all stablecoin users to have direct access to. Now, the one tidbit to this is Solstice also takes that yield and the product. So when you lock your USX up, it's not just like a fund where you toss your money away and say goodbye and it grows value and then you get it back at some point. You receive a liquid staking token called EUSX when you lock your USX up. And that EUSX is a composable yield-bearing asset. So that's the thing that will rise in value as yield gets generated. And now with all these other DeFi applications, Camino, Exponent, Loopscales, et cetera of the world, you can go do things with that EUSX to generate more accrued value out in the ecosystem. So it's not stagnant. It's something that you can go use across DeFi. And it's generated to date, where USX is currently the 5th largest stablecoin on Solana, I think 24th in the world right now. And we've been generating a lot of user traction, upwards of 275 million of external capital from both institutions and retail because of that simple one-click access to safe, secure yields that we're transparent about on the back end. So that is Solstice's protocol. It's also important to note, as a one quick side note before I finish, Solstice as a group, we also acquired a staking unit last year in December. We have staking servers on-prem in Zurich, Switzerland, a number of L1 staking and validator services that we offer there as well, which is part of our Solstice Finance group, managing just over $1 billion of assets on the staking side.
Incredible. Solstice is a relatively recent launch, but it has grown very rapidly, especially in the Solana ecosystem. Correct me if I'm wrong, but you're currently the 5th largest stablecoin on Solana. If you don't count Tether, USDC, and PayPal, you're number 2, right? Which is huge growth over such a short period of time. Congrats, by the way.
Thank you.
Maybe if you could give me a breakdown of what you think factored into that rapid growth. How did you think about community building in terms of going to market? What was the secret sauce to that?
One of the major things right off the bat was trust. So with any stablecoin or any yield generation protocol, you have to establish trust in the ecosystem. So how did we do that on day one? On the yield side was effectively at the DSX level, we had a prop fund that was doing this exact delta neutral trading strategy for 4+ years with hundreds of millions of capital. Now we took that trading strategy and the team members and we incorporated that into Solstice, where now we have a long-standing track record of proven third-party audited returns that users can say, these guys know how to generate yield. We're not going to say, hey, here's a back-tested strategy that we came up with in our garage. Trust us, we're going to make you money. It's an institutional grade operation on the back end. And that's what allows for that trust factor to say, okay, these guys know how to generate yield. Now on the USX side, how do you generate trust in the core stablecoin? Proof of reserves, attestations, using the most institutional grade custody accounts possible in the market, coppers and CEFUs of the world. We're accessing the most liquid markets on the trading side via SEXs, all of these combined on the back end. And on the front end, just a simple one-click yield procedure allows for a lot of users to say, let's remove the complexity out of DeFi. Let's remove the volatility and the massive overinflated incentive pool analyses that a lot of these protocols come out with in the current stage of just saying, look at, we have the highest yield in the world and everyone flocks to it. And it's a bunch of mercenary capital. Then incentives dry up and there's no core utility, so they flock to the next one. We're not built like that in any capacity. We've built this in a way that structures a long-term growth narrative that has a sticky user client base, which right after launch, we saw over 25,000 unique USX holders, which from the DeFi sector of immediate launch, we're very pleased about. Immediately on our flares and incentive programs that we've launched at a small scale to date, that's over 800,000 users, assuming that some of them are bots as well, but assuming that that's in the 100 to 200,000 range of core users utilizing the incentive programs as well. This is benefiting the entire DeFi stack. So when you have these integrations, not just at the yield level, not just at look what we can promise you and look what we'll deliver to you, et cetera. You have to go deeper and say, where can you actually get utility out of using USX? Where can you get utility out of using EUSX? And those are applications like our partners I'll shout out, like Camino on the borrow, lend, and looping side, on Exponent on the PT and YT systems, on Loopscale, on payment systems like our sister company, DeusX Pay. You're able to use a lot of these utilities on day one, which makes it worthwhile to stick around for. And that's usually what a lot of protocols follow with. So you have to start with the application layer, you have to start with the real use cases, and you have to be honest about what you're delivering to people as far as yield goes.
For sure. The use case point is, I think, particularly salient, especially considering one of the biggest challenges in the crypto, but more specifically the stablecoin space is the issue of fragmentation. New chains, new tokens, launching at a frequent cadence with no signs of that stopping. I just wanted your thought on the sort of midterm to longer term solution for that. How should stablecoin issuers, stable chains start thinking about how to integrate and start operating a little bit more seamlessly? Both from a UX and from a technical perspective?
It's important to differentiate. When I say institutional DeFi, I really mean DeFi. I mean permissionless. I mean application integration. I mean the true spirit of DeFi. Most of the stablecoin issuers, most of the stablecoin applications in the current status of the world are CeFi applications. They are full-blown TradFi applications that just optimize current TradFi procedures. Those do not unlock any true DeFi value. That's not to say they're not valuable. There's a lot of amazing use cases in the TradFi sector for people that aren't involved in DeFi that can go utilize this technology in a great scale now. That's one market. On the DeFi side, though, that is specifically why we architected a synthetic stablecoin to be backed by the two largest stablecoins in the world, to have that stability of friction, but also to have that flexibility to integrate deeper into the DeFi stack. There are so many amazing applications, especially in the Solana ecosystem, where you're able to access this entirely new world of finance, new yield opportunities, permissionless access, privacy, all of the different aspects that make DeFi what it is. You're able to experience that via a stable coin that's trusted, plus a yield-bearing asset that will generate accretive yield as you go down the stack. So what I think a lot of institutions need to consider is that they're not going after a DeFi play, or even though a lot of companies say that, or they're not going after even a true crypto play. What they're doing is simply utilizing the technology for optimized procedures, and then being able to say to all their competitors that we need to transfer off this fiat system over into the stablecoin side. Because the more heavy of a weight that we have on the TradFi side that's using stablecoins as their core capital velocity layer, the more spillover we're going to have into the DeFi sector of individuals trying out new and exciting things that they can do with their stables for the first time.
Yeah, that actually brings to mind, there's a podcast I watched a few days ago. It was the founder of Codex on Bankless, basically taking a stance on opinionation of use cases, right? Like rather than deploying a catch-all chain or a general purpose chain or a general purpose stablecoin, actually being very intentional about the functionality of the token and of the protocol that you're building toward, right? It seems to be an emergent trend.
That's exactly right. Again, at the end of the day, humans have not changed in that regard. It's core value. Are you providing of me value for this new product or service? And the core value for accessing these DeFi yields is direct. It's accruative yields. It's new access to borrow lend markets. It's new access to collateralization. It's now being able to buy equities on chain. For example, just in the Solana ecosystem recently, you're able to buy equities on chain directly using these type of stablecoins and DeFi products. You're able to access more and more of the world of finance as the weeks go on in this DeFi sector, while owning the whole flow of funds yourself, by owning the capital in the back end, by saying, this is my world and I don't have to give up authority to the banks of the world in order to access these competitive yields. That's part of what we say, right? Democratized access, institutional yields, because we're effectively taking what is traditionally a hedge fund strategy and democratizing that out to anyone, whether if you have $5 or 50 million, you get equal access to those returns.
So you're taking a tried and true playbook leveraged by traditional finance, applying it to DeFi and giving users access to the same upside that an actor in the traditional financial world would have access to.
That's exactly right. A lot of these guys, what we also have to be very cognizant of, right? A lot of the DeFi products, they've existed in TradFi for years and decades. This is going to be something that we adjust with innovation towards the DeFi sector, build it on the right technology stacks, and then you start to see the accretive value where you start to see something new come into the industry. So again, the hedge fund strategies have been in place forever, but now it's about democratization of that. Everyone, I don't care how much money you have in your bank account, you should have access to the best yield generation strategies in the market with no high watermark.
Yep, makes sense. So in addition to the recent launch, you have also got a community-based incentives program going called Flares. Very easy look on Twitter. Seems to be going very well. People are taking it. Wondering if you could break that down for me a little bit, the thought behind it, what people can do to get involved.
Yeah, at a very high level, the Flares and Incentive Program comes from our tokenomics model for the SLX token. So the SLX token is going to be our community-based ecosystem and utility token for the protocol itself. And now pre-TGE of that SLX, effectively, we're incentivizing users to go utilize USX and USX across the ecosystem, whether that's supplying pools on Orca or Radium, or whether that's interacting on Camino or Exponent with your PTYT systems or the borrow lend programs. When you do these things in the ecosystem, you're getting rewarded these points. And at face value, immediately, they're non-transferable, nothing that you can extract in value of it. But when we TGE, those will be directly transferable and convertible to SLX tokens. So just by participating in the ecosystem, we're showing a very community-first driven approach to say, let's distribute the token in a large-scale way to users that are incentivized to do so. So what we hope is that people go down that journey and they see utility in USX and USX. They see how they now have this permissionless access to the world of DeFi on Solana with attractive yields, with competitive yields, with access to all these other applications. And while doing so, they're also going to be earning just for participating. And that's really the heart of the Flares program that we've designed and offered into the market. So we're very excited about the participation rates to date. As I mentioned, there's over, quote, 800,000 users. However, some of them, we know that some of those numbers on that are bot side, but we should expect, a few 100,000 users on the Flares program alone, just getting involved with the ecosystem of saying, I want to be part of Solstice. And the community feedback has been fantastic to date. And we're very, very excited for the TGE coming up.
Amazing. In addition to that, you also built a fairly stacked partners list ahead of launch as well. Maybe talk a little bit about that strategy, where you were intentional about it, and what are you looking to do going into the future?
Absolutely. So the institutional side is just as important for a strategy like this. And everyone should be cognizant of that, both on the retail side as well. Because when you have a protocol that allows for both institution and retail money to come in, institutional money will be the bedrock of a lot of that TVL, which is why most of the protocols in the industry, most of the yield-bearing strategies, 90+%, I would estimate, all have a bedrock of a majority influenced by institutional capital coming in and raising that, which has generated hype, which is allowing for core liquidity in the space, which allows for market makers to come in and allow for stability on pegs and secondary markets and a lot of the different kind of institutional grade services that beef up the DeFi industry. That's a very important part. It's a balance of both sides. And you can't have one without the other in a large scale way in order for a DeFi protocol to be successful in the current stages that we're at. Now, institutions that we brought on are specific to players that know the ecosystem well, they handle the dynamics well, and those are players including players like Galaxy Digital, MEV Capital, Susquehanna, Oros, and much more, Bitcoin Suisse, that have come on and put their name and brand behind Solstice and said, this is where we feel safe parking our capital and offering this to our clients as well. So it allows for a distribution mechanism for more capital to come in. But more so, it's about the fact that Solstice has designed a system that can source net new capital into the ecosystem. That is a challenge that all of us in the Solana ecosystem and all of us in the DeFi ecosystem want to solve. Because we can we can pass money around all day long to each other across the applications and users. What's really going to benefit us and take us to that next stage of growth and development is going to be getting net new capital. And we've had several investors on the TradFi side that have never touched crypto before, have had their first touch into crypto and DeFi through Solstice. And why? Is because on the retail side, yes, you access it permissionlessly, one-click access on the DApp, connect your wallet and go. On the institutional side, it's not as easy when you're moving tens of millions of dollars. So what you have to do is you set up a regulated fund structure on the back end to allow them to access that fund in a safe way through some OTC white gloved experience to make sure that their capital is going through all the reporting, KYC, AML, all the things that their business needs to succeed. So that balance between the two is really at the heart of the strategy, and sourcing net new capital is really the intention for growing the DeFi ecosystem overall.
It's great to hear. It's actually one of my longer term concerns with the space is I think we spent a lot of time playing self-referential games. Simply as a function of the tech and the regulation not being in place to kind of do anything else and plug into the outside world. It seems like that's changed very recently. And I do think we run the risk of, if we don't build it ourselves with the core principles that we all, a lot of us came into the space with, then we're going to be waiting for the outside world to plug into us. And I think that there's a lot more risk of an undermining of those ideals from that direction.
I couldn't agree with you more here. This is a point that a lot of people overlook. It's a lot of players in the space either build glorified back office for TradFi, which creates the same high watermarks, the same fee issues, the same permissionless protocol data issues that you see in TradFi. Also, you have a lot of these real DeFi players doing things on the back end that are the same nasty games that TradFi plays, that gets us into scenarios like 2008, right? You start to do things on the back end with clients' money, with whatever it might be. So what I mean by institutional DeFi is really what we're doing to raise the bar to take it to the next level. What does transparency and yield look like? What does stability in a peg look like? For example, October 10th came around, the greatest crypto liquidation event in history. Solstice saw almost no effect at all. We had no depeg. We had nobody pull out of the TVL side. We had positive returns through that crypto liquidation event all the way through. And that's when people really started to build trust in it, because they said, look, they just went through right after launch, one of the greatest Black Swan events that you could mark in the long list of crypto Black Swan events. We had that as one of our battle tested moments, and everybody and all of our users and our community saw that as my money stayed safe, my peg stayed maintained, and my yield continued to generate. And so that is a sign and a showing of testimony to how we raise the bar as a DeFi industry. Because when we can go through events like that and not take a loss and not take a hit, then you know that DeFi is actually evolving in a way that is in a much more mature state now. So we're very excited about the place that we've come to, but building these institutional rails are crucial to getting that narrative right.
Agreed. It's going to take a couple of projects to show the way, but I think others will follow once that path's been cut.
That's exactly right. And that's what I hope as well. Like, one of the major things I have issues with in the space right now is a lot of these incentive programs that people overpromise the world at launch just so that they can get the highest level TGE and then max extract as much of their token into core stables for their treasury as possible. That's been a game that has been over and over and over played in the DeFi industry for the last 5-6 years here. What we need to do is move away from that model. And people that see that industry, the retail market especially, who you always are the exit liquidity, need to look at that and say, I'm not touching a project like that. Do you have honest valuations on FDV? Do you have honest token distribution models? Do you have a strong team with strong backgrounds that are posting regularly about what they're doing and the transparency behind it? Are there attestation and proof of reserve metrics for the core stable asset that's generating these yields? You need to hold these protocols to these standards moving forward. And this is the call to action to everybody in DeFi in the current stage.
I love it. That seems like the perfect way to close things out, I think, actually. A call to action.
I love it.
Thank you, Ben, for joining. If people want to get involved with Solstice, learn more, hit me with the websites. And
Absolutely.
we'll include in the show links.
Yeah, absolutely. Just as the quick filler at the end, you can go to solstice.finance and you'll check out everything that Solstice has to offer with one-click access to the DApp. You can also follow us at SolsticeFi on X, and as well as my own Twitter, Ben_Solstice. So all
Amazing.
things Solstice for us.
Listen, thank you so much for joining. It was a great episode. I really appreciate the time, and congrats on the launch.
Thanks so much, Dave. Pleasure being here today.
Talk soon. Thanks.